Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:37 p.m. on an extremely cold, almost a Midwest cold type of weather out here in the New Jersey, New York waterfront, overlooking New York City and Statue of Liberty. Blessed, very fortunate to be living here. And it is, like I said, it's 8:38 p.m. This is a strategic Clueless A Trading webinar. I believe it's going to be quite important for people who follow my work and are profiting from it and benefiting from it. And I'll share a couple of my thoughts, go through some technical charts and all that good stuff, and get people prepared, get all my members prepared for what's coming next. And hopefully they are going to be almost as accurate as many of the other times that I have forecasted many of these things. On that note, this is for full disclosure, this is purely for financial education, not for any solicitation or advice. 2 marketing pitches. Number 1, please follow us on Instagram at Clueless A Trading. I tend to post on it time to time, and sorry about that. And it's great for promotional marketing purposes, and I will, and anyone following it, even if they don't have an Instagram account, just create one and just follow it. We need more followers. That's how good old Facebook and Instagram picks it up, the algos. It's all about algorithms. Second, this session is available on the Clueless A Trading Google YouTube channel for anyone to view. So if you want any of your friends, colleagues, or referrals to check us out and understand and see what we have said prior to things happening in the market, i.e. prior to making money, then certainly direct them to the Clueless A Trading Google YouTube channel. It certainly would be a great benefit to them, and hopefully we get new members. Finally, we always welcome referrals. I would say 99% of Clueless A Trading is all about referrals. There's always attrition, just like any other business. People come and leave, but most people stay. And on that note, any referrals from any of you are always welcome. They always tend to be the best traders who are willing to learn, and great members. Okay, so on that note, let us begin. We are on the first week, trading week of the month, ending tomorrow, and well, second week of the month, I believe, because the month of January from a trading standpoint started on the 2nd of January. Sorry, little correction there. And the second week will end tomorrow, the 11th. So saying all that, let me just go through something very quickly, like I always do, is a couple of broad points. Here is something that I found from my old archives on my computer, which is the behavioral game theory aspect of the business, which is, I believe, especially during extreme volatility, the ultimate determinant of whether or not you're going to make money on either uptrending markets, reflex bounces, rallies, bull markets, or bear markets. It's all about the mind. And I know that better than anyone. We all have problems in life. I don't need to remind anyone. It doesn't matter whether you are Jeff Bezos, who's sexting, from what I read in the New York Post, to his current girlfriend he was dating while he was married. I guess they had an open marriage. I don't understand that part. Anyway, and now he's getting divorced. So, and he's the richest guy in the world, right? So us, who are the puny people in the world, we all have our problems. We have our bills, we have our issues, everything. Throughout all that, let's talk about the emotional aspect of the market. So the market basically, and this is a great chart, the point of maximum financial opportunity. It's very simple, but it's very true, because the behavioral part, which is the emotional part, or the behavioral game theory that I utilize in my modeling of what things are out there, the bullish, bearish intelligence reports, the AAIA intelligence reports, investor sentiment reports, and everything that is incorporated. And then I look at my technical charts. Always remember, technical charts in itself, and I do some extremely precise ones, just on itself is not the elixir of profits. It is what your mind is thinking, what the rest of the masses are thinking, the outside investing masses, which include hedge funds, which include mutual funds, which includes pension funds, which includes the media. But let's talk about the money people, the Wall Street, the hedge funds, the pension funds, the mutual funds, which are the 800-pound gorillas in the market. As I've said many, many times, I come from the mutual fund industry at Putnam Investments back in Boston. So the fact is that what are they doing? How are they thinking? They don't always think alike. When the hedge funds are day trading like monsters, Netflix and Google's going up $30, dropping $20. The algos are being used being used in an extremely heavy-handed manner during the day, creating extreme manufactured volatility. The mutual funds might be buying. Maybe the pension funds are waiting to allocate resources, cash coming in, because that's how it happens, especially the pension funds from the big state-related pension funds, the sovereign funds, which are run by countries' treasuries, right? The Norwegian sovereign fund is one of the largest in the world. So there's a lot of different players, okay? But generally speaking, you get a feeling of what is going on, and I get a feeling of what's going on based on my experience in running the subscription service, trying to help people every single day, and I put it together. So in my opinion, the euphoria part was obviously January 26th, when things just everyone was just very happy because they caught a portion of the move here. This was 2017. I would say the first part of January, things started to move up. The whole President Trump euphoria, the tax cuts, the whole thing, lots of good stuff. And people started to get in here. They got in here. They got in here. They got in here. And I kept on saying, as we moved up through the halfway point, this is an old chart. That's why it says November 2013. And I kept on saying, you know what? This is getting a little bit too frothy. I can tell, chat rooms are full. People are saying Amazon's going to go to 10,000. I'm just kidding, but that type of stuff. So it's not that hard. People think they're making money. They're very smart. That reminds me about something really important I'm going to say. Nobody is really smart in this business. You can be tactically smart, but you're not market smart. Okay? So I know a lot about the market. I believe that using my tactical expertise on creating the charts, understanding the background of the big money management complexes of Wall Street and the mutual fund complex, I do understand how those managers think. So in that case, I'm smart. But overall, nobody's smart. We have to take advantage of the opportunities that come along our way and try to be at least half a step or one step ahead of the game. That's what we do at Clueless Aid Trading. And you all know that. Okay? Then the euphoria phase, and then boom, the market, the mom and pop, got sucked into this, which is fine. They made some money. And then the February, and then sometime by mid-January or so, things started to go wrong. And the market basically collapsed in February, collapsed. So this is what happened. And all along the way, there's optimism, excitement, thrill, euphoria, the worst part to ever buy anything, right? That's why I don't like chasing things when they're up 13, 14, 15, $20. I'd like to be there when they're down $40. You guys know that very well. Some of you join me on that crusade. Some of you don't. That's okay. You can always buy in the middle. Or you can, if you're buying too late, you're going to get smashed. And especially with the machines in power, that's what they're going to do. So saying all that, you can read that: anxiety, denial, fear, desperation, complete panic. And this is pretty much what happened in the months of October, November, December. This was pure capitulation, despondency. That was during Christmas. So this would be December. I'm going to just write the number down. This would be December 24th, what I call the Christmas Eve massacre or Christmas Eve complete capitulation. What I consider to be, from what I know, was a coordinated attack on the US financial markets by sources unknown, I believe primarily European, large hedge funds, and hardcore, dogmatic US-based hedge funds who basically were capitalizing, making money, which is fine. It's about making money, right? So, but they wanted the US markets to completely collapse day before Christmas and create a complete despondency, i.e. despair, to the point that nobody wanted to ever look at a stock. That's the point of maximum financial opportunity, what we call at Clueless 8 Trading, the perfect moment. Trying to write that with that. I don't have my writing board here. I do have it, but I didn't turn it on. The perfect moment. The perfect moment is the point of ultimate despair, despondency, complete silence. No one ever wants to buy anything, not even nibble, because that's where we start nibbling. That's where, what David Tepper uses the word nibbling. I use the word nibbling. We start to buy a couple of contracts. As options traders, we start to scale in. And since December 24th, this happens. There is the depression part, the hope part, the relief part, and this is where most of our members, in my opinion, I don't talk to them, I don't talk to them directly every day, but are, and the majority of the investors, our members who are tactical traders, primarily got into at these levels. In my opinion, some of them got in actually right with me, right at the bottom. Slowly but surely, stepping in, pedal to the metal as we move forward. Momentum trading, candle expansions, stochastics turning, everything being shown on the internals and the external, as in all the different dynamics and technical things that I show every single day, all through the day. So at this point, we are in the relief stage here. Like, okay, I think we're out of the woods. The most dangerous words ever in trading, out of the woods. You're never out of the woods. I don't care whether you have tripled your account, whether you doubled your account, whether you made 40, 50%. You never want to feel good. Always remember one thing, and this is my saying. I used to say to my institutional clients and high net worth clients on Wall Street back in the days, till 2010, 2011, when I was in Wall Street, is a bull. And I'm overall bullish. I'm bullish on life. That's how God created me. Bullish. I'm waking up alive every morning. That's a bullish event. And bottom line is that every bull always watches his back. Is the bear going to attack? Right? So I'm always watching my back. I'm always watching the other side of the coin. The VIX, the VIX, the volatility index. I'm watching the sentiment indicators. I'm watching how my chat room's doing. I'm watching if any of my traders are responding to my polls, my trader polls, which all of you should respond to, regardless, because I don't know who's responding to what. I can't see who's saying they're optimistic or they're terrified. I just see the numbers. I'd like to see more of participation on the trader polls, because it helps me create the trading models that will make you guys money, long or short. So please do respond to the trader polls that I put out there on the private Twitter feed. So we're in this relief stage right now, and we're getting into this optimism stage. Therein will come a substantial sell-off. Generally speaking, that's how it happens. So we're close to it. I keep on showing the VIX, the volatility index. We are extreme oversold. We don't have the crossover up yet. Some of you don't understand my charts. Reach out to me. I will give you a complimentary advanced coaching session. Some of you want to move up to the next level, sign up for the advanced coaching sessions. It doesn't cost an arm and a leg. I'm not charging $1,000 to teach some of the most advanced techniques in trading. I'm charging a couple of $100 for my time and to pay for the administrative fees and the fees for doing it online. So step up. People who have done that, they've seen the difference in their P&L and their trading portfolios. So that's where we are right now. We're in this relief to optimism stage. And if I'm wrong, then we're in the hope stage. My opinion is that the overall market is somewhere still in the hope stage right now. So we still have two more. We're in the 7th inning of the game. And I'm talking short term and intermediate term. Longer term, pretty much a significant amount of people, and I live in a very nice neighborhood, very wealthy people around, and they're all scared. They're all scared. They all think the U.S. is going to be doomed by President Trump. And they're Republicans. So you go figure. All right? So life goes on. Let's move on. We're done with the behavioral game theory aspect, which in my opinion, in these extreme volatility times, is almost 80 to 90% of how you are trading. So mark my words. So here we are. I'm going to try to keep this short. Tonight, I do have to keep it short. Okay. Here's your E-minis, which is the futures for the SPY, S&P 500. This is what we were, point of maximum despondency, despair as I like to call it. This is where we are in that hope relief stage. This is where optimism really creaks in over 2,700. And this is the massive downtrend line from the all-time highs in the market to, actually I have to adjust it a bit. I just noticed. Bear with me 1 second. Technical analysis is all about joining levels. Any one of you can do that. You just have to keen eye, wear some reading glasses. I wear computer glasses / reading glasses because you have to look very carefully at each of these lines, each of these supply points where the selling comes in, each of these demand points where the buying come in. The more you see it on a larger screen, trust me, it's very simple, the better off you will do in your business of trading. So this is where we are right now. And at this point, the lines have been drawn very clearly. We have, that's better. This is your weekly. There are technical indicators which are extremely positive, such as this. The weekly has crossed over. Remember, stochastics crossovers, especially the slow stows. This is the slow stow. Crossing over is extremely important. That means the bulls are creeping in and slowly but systematically demolishing the dogmatic bears. So this is good. We're looking at a max move here of around the 2750 to 27, low 2700 levels. That is a good solid 600 to 800 to 1,000 points, which would bring us up to about 25,000 on the Dow Jones Industrial Average. That could very well happen by the end of this month, if not, if technicals cooperate. Like I explained to you for the first part of this webinar, it's not all about technicals. There's a lot of other macro factors, volatility factors and such that, that make a huge difference to whether or not these technicals are going to work within our time frame. But I would say by late January, early February, given three major economic determinants, which is number one, the ongoing trade U.S.-China negotiations, which the President Trump's team, business team is doing a terrific job. Steve Mnuchin, the Treasury Secretary, just mentioned that one of China's top leaders might be here to continue with the talks, which is excellent news. The Fed has already stated their case, including Mr. Powell this afternoon. Want to know the details? Go to my Twitter feed. I walk people through it. You know, he was moderate. He didn't make any harsh, hawkish comments that he would go on a rate hike binge or balance sheet reduction binge. He said we will be data dependent, which is very important. That means he's flexible. Earnings are a major factor, so as long as earnings don't completely plummet, more importantly, if guidance from our major corporations, U.S. business, does not completely plummet over the next couple of weeks, we're good to go. So, we know what the risks are. One of the short-term risks is the ongoing government shutdown. I believe President Trump will cut a deal. That's what he's known for. And more importantly, he has to cut a deal because this cannot keep on going on. The Dems are standing their ground. They're being stubborn. They're being difficult, but that's what the opposition is all about, right? That's what it is. In democracies, you have the ruling party, then you have the opposition. The opposition will do everything to thwart the positive, what should I say, constructive developments and progress that the ruling party does. So nothing new about that, so don't be shocked. So saying all that, this is technically what we're looking at, 27.29. This is good. McLaren oscillator, still not overbought. Remember, we got overbought around 100. And on a weekly basis, swing chart, not the intraday noise, not the daily noise, the overall picture is telling us that we will at least get towards the high 2600s. And if all those three other factors that I said work out nicely, then we will hit 2800, if not 2750, which is a major obstacle or a major resistance line. Now, you have to keep these things in picture as you are trading, so this way you don't freak out just because the market drops 100 points from top, intraday, from being higher to lower. And then look what happened. We ended up 122 points. We went back and touched the highs of the day. I mean, beyond that, and we shot forward. And I walked people through it. 20-cent calls went to 60 cents. That's 200% on your money within 1 hour. There are no excuses, guys. The mental part and the baggage and the demons in your head that hold you back from trading the charts and having the grit to not always freak out when the markets are dropping. And I'm putting out there, and I'm telling you straight out, I am no genius. I've been caught in bull traps also on heavy duty intraday moves. However, I am also weighing the scenario outside the intraday movements, weighing the positivity of the Trump administration against the negativity of the Trump administration in dealing with this border funding crisis, which they have to deal with, in my opinion, in a more business-like fashion. So I'm mixing it together, and I'm letting you guys know uptrend is intact. I am looking at almost 22 different charts, almost 30 different indicators. Most of them I don't show because you guys will be just blown out of your mind. I'm looking at the VIX primarily, which I share with you guys, and then I'm reaching my conclusion. That's my job. Like I always ask, are you doing yours? So on a weekly basis, this is looking good. Let's go back on the daily. On the daily, this is where we are. So we have a minor red candle. Futures are down to 25. I'm sure there are some members and traders out there saying, oh my God, here we go. We're going to completely collapse. Well, technicals are not showing that. As long as this is and I'm going to go from the highs, all-time highs, 29.47, to where we are right now. This is a bull flag. Lots of volatility, bull flag, intraday volatility. And the bull flag doesn't resolve itself till it hits the major supply point where the big selling came in. That's roughly above 26.50. That's a lot. That means it's almost 60 points on the S&P handles E-mini handles, that is roughly 400 points on the Dow Jones. You could handle 400 points on the Dow Jones because you'll have a double, more than a double or a triple, depending on what type of short options that you have, short-term options, whether you have the weekly, which will fly through the roof. That's why they go from 20 cents to 60 cents. Originally, I recommended them when they were on 50 cents. Then they went down to about 22 cents, bought more. Then they landed up at 60 cents. And these are the ones expiring tomorrow, as you all know, which were the January 11th, 260 calls on the SPY. Look it up. As a trader, you have to be flexible. You have to risk money. You have to understand what I'm putting through, because what I'm doing every single day is extremely powerful work. When it comes to the market, I'm not stupid. I'm stupid in a lot of other things in my life, I guess, ask my wife. But point is that, but when it comes to the market, I am a disciplined robot. So what I'm putting out there, respect it, but more importantly, respect my charts. Use your own gut feeling, use your own charts, mix it in with mine. You will be in a much better place than you are right now. And that's what I wish for everybody. So that would be a pattern completion somewhere in the 2650 to 2700 level. Whether or not we get to 2800, I have no freaking clue. I believe that once we get here, we will have a pullback. That pullback could be a possible inverse head and shoulder, where we drop a couple of hundred points, maybe even come down to 2500 for all I know. And then from here, we attempt a major move higher. One way or other, this downtrend line, in my opinion, will be engaged. Because remember one thing about markets, they're very technical. And so if they have a certain open interest at a certain level on the SPYs and the E-minis, they will get there regardless of the news. Like Kramer was screaming about today, the market should have been down with all the American Airlines news, blah, 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 homes and this and that. Maybe they should all subscribe to Clueless 8 Trading and follow what we do. What should have been, could have been is not my business. It is not for me. My opinions are worthless. My tactical opinions and my tactical charts is what has worth. And I'm sure you all, if you understand that. So Kramer was screaming about, oh, it should have been down, markets are up, that's a great sign. No, the markets wanted to go somewhere, that's where they went. And I've been showing this repeatedly through multiple charts. Imagine if the world knew what we did. I wouldn't even be able to talk to any of you because we would probably have like 20,000, 30,000 members. If the world knew what we did, they would be flabbergasted. They would be impressed to the point where they just wouldn't believe how accurate these precision charts that I show and where they go. It's a fact. I'm not bragging. It's a fact. Facts cannot be denied. So, saying all that, that's pretty much where we are right now. We still have a little bit of room to move. Yeah, we can vacillate, and things completely change if we drop a good solid below 2520 on the E-minis, which is roughly around 2530 on the S&P. That's when the pattern changes. That's a different story. And I'm not going to be sitting around not walking my members through what to do if something like this starts to happen. Because at that point, and I'm just doing a back of the napkin kind of thing, at that point, the trend changes and we can short the heck out of the market till about 2400 and make a crap load of money. What happens intraday on a short-term basis? Yeah, you can. I know I buy these couple of SPY puts here and there. They'll last maybe 30 minutes before the market turns. You have to be quick on those. You go to bed with them, you're going to get burnt. So far, technically, everything looks good. Candle-wise, McClellan-wise. And this is something I talked about in my past webinar, that if we start to see the slow stochastics starting to move sideways, as we are seeing now, let me clean this. As we are seeing now, they are starting to move sideways. You see that? Not like this. This was the high volatility events, the big macro worldwide, primarily European hedge fund liquidation, where every major pop in the market was hit hard because they needed to get out. we are starting to see a sideways movement on the slow stows. These are not just lines, guys. These are big money trades. That means US fund managers and big money mutual funds, which is where most mom and pop keep their money, the pension funds, are in the market. That's why Boeing is doing what it's doing, recommended from far below. So as long as I said this is my last webinar, we start to see a sideways movement above 80 on the slow stows, and you guys all have trading platforms, you all have charting capabilities, create your own charts, just match them with mine. That's all. But they're moving sideways. If you are a dogmatic short or a bear who always thinks we should drop 1,000 points every day, which still people think, look at stock twits, look at the other forums, they all seem to be US haters, if you ask me, and I've made a big point of that in my last webinar, and I mean that. They all want the demise of the US financial markets, so we're a weak nation. Well, they can all just, they're basically suffering right now. They're getting impaled. They're getting decimated. They had their day here, and we still made money in between all these moves. Now it's the day for the US, United States of America, to rise. And I'm not saying we're going to go back and revisit the highs. I'm simply saying that we have a good 400 to 600 points in the Dow Jones that we can capture, if not a little bit more. And if President Trump plays his cards right, then we will hit the 2,800 level, which is substantially higher from where we are right now, which is roughly 1,200 plus Dow points. And if anyone thinks that cannot happen, well, then they are living in la la land somewhere out there without any concept of what's happening in the market. So that's your bigger picture. Okay? The shorter term picture. What's going on now? Because we all like to see our P&L be green every day, right? Doesn't always happen. Sometimes we have to buy in the thick of the ugliness. The P&L is blood red, and then in the following 24 to 48 hours, your P&L is delivering you 40, 60, 80, 100, 200% on their money. I had a text that one of my members, the small player, didn't want me to post. They took a couple of $100 into a couple of $1,000 since here, and I was so happy to hear that. And all they did was buy one call at a time. All they did was buy one call at a time. One SPY call at 60 cents, at $1. And all they did was trade the SPY. Yeah, they traded, I think, Netflix too, which obviously paid the bills in a very handsome way. But they were buying here. His account went all the way down here. He added more here. And he took a couple of $100. I mean that. Kept on playing, kept on rolling it out, taking in profits, getting in, moving forward. And he texted me, said he is up a couple of $1,000. His average net return is 700%. 700% net ROI on a couple of $100 since the Christmas Eve massacre. And he was getting in prior to that. So you tell me what you guys are doing. That's 700%. Imagine somebody traded with $30,000 and 700%. They'd have $210,000 right now. No other business will deliver this type of results. Now, it's not because of my genius. My genius is putting the charts together. It is because the volatility in the market and the big billion-plus-dollar players are getting in. That's the reason why you see so many massive reversal green candles, which look like this. And all I do is depict it on the charts so you guys can see that these candles are not something that you just sneeze away. It's like a guaranteed lottery ticket, like fixed, like in most other countries, right? That's what they do. And you're saying, no, thank you, I don't want to take it. That's what most majority of the RET, retail emotional traders, are doing. And if you ask them, they're like, oh yeah, I was busy with this, I was busy with that. Okay, great. Maybe they have a lot of money. I don't. I want to make more money. Why? Because I'm driving around like, and drinking and womanizing? No, because I want to make my family safe, secure. I want to give to my favorite charity, especially the armed forces. Give it to some humanitarian causes. That's my goal. That's it. And hopefully see my grandkids, as I told one of my good friends here today, Jody. So that's it. So if you're not really taking advantage of these type of massive movements, then I have nothing to say. So bottom line is that we're going to get to the upper end of the Bollinger. Which is again 265 or so, which is around to what, 2650, 2660 on the SPY, and that's decent. Take profits along the way, staggered profits, no problem with that. Bear with me 1 second. But pattern completion comes in at around, on the SPYs, at around 270, 2700 or so. Do we get there in a straight line? Nope. We'll probably get here, pull back a little bit. That's why you have a red arrow. Let's look to see if this is a cup and handle. If this turns out to be a cup and handle, and you don't even have to decipher all that, because I do that for you guys every single day. All you guys have to do is react, and not react to every little minor intraday candle that comes along the way. Pullback candle. The 15-minute charts, the 1-hour charts are great for day trading and short-term swing trading. These charts are great for really looking to see what's happening in the broader market. Now, volatility is omnipresent. It could be a tweet coming out of President Trump. It could be a negative comment out of China. It could be a Fed. The Fed's right now, all the Fed governors overall, and Jerome Powell, who I said from day one was a nerd who misspoke and that it was going to be okay, and I was dead right. If I was on the 70th floor of Goldman Sachs right now, I'd probably get a $20 million bonus for setting it right when I said that day that he misspoke. It's on my webinar. Maybe I should just copy and paste and send it to Goldman Sachs for all those educated derelicts to figure out. I knew he didn't mean what he said. But now it's all clear, so at least they're out of the way. You think he's suddenly going to change her? No, he's not that diabolical. He's a straightforward, all-American guy. Jerome Powell, Fed chairman. So, saying all that, it could be a little pullback, and then at least 264. And playing the SPYs is great. You can buy them at 60 cents, 70 cents, $1, $2. They go up to 3, they go up to 4. Sometimes when things go berserk, they go up to 10. So that's it. This is actually the most effective chart that you can trade. We see a couple of things here from a technical basis, which are extremely positive. One, we saw this is your 3450 crossover. We saw it happening here, and now they're crossing over the green line and the red line. As long as they're trending forward, market's going to zigzag up and down, and they're going to move higher. If they start to trend down, then you need to go generally short. But you can see that very clearly. Let me zoom in. They are both trending higher. If they move up too fast, too quick, we call it which is a large overbought condition, which we're going to look at in a second. And this is the only chart I'll explain tonight. I'll show you quickly the other ones, but I'm explaining why it's on a swing basis. This I'll show. So if you move too far away from it, from the highways, remember these are the highways. It's not rocket science. Then the standard deviation is going to be +4, +5. You know what's going to happen. They're going to revert back to the mean. The market wants to basically stick to the highways, which are the moving averages. I use 34 and 50. You can use whatever you want, but on it for traders basis, what's work excellent is basically the 34 and the 50 moving averages. So far, the deviation from how far you moved away from the highway is not too high, but if it gets up here, these are still climbing higher, but you're way off that, then you know very well we're in extreme overbought conditions. The VIX will be down to 18, 17, 16. Please review my VIX charts at your own time. In fact, review it during the day. At that point, you will get a reversal rally down. Reversal pullback down. Just the way it works. You have the Bollingers to contend with. The dotted line is automatically put out there. The Bollinger, upper Bollinger is 265. I would say at this point, it would be very smart to take some really nice profits off the table and sit back. Sometimes you just have to sit back. Okay, so that's the external part of it. Moving average is good. Candles are good. This is your what's that one? Oh, this is the VWAP. Is this a VWAP? Let me see. Yep, the VWAP. I should actually change the color. That's a value weighted average price. Please read up on what the definition of the VWAP is. Institutional traders use that very effectively. The VWAP is right now, it's tracking the VWAP. That's great. Okay. It's a very interesting concept. I've explained it before, but I would leave it to you guys to go to Investopedia and read up the definition of VWAP. You like what you read. Now, let's sweep all the way back to that's your naked chart. This is what we trade. That's one of them. This is what we're trading. The markets are down about 6 E-minis. This is what happened when President Trump tweeted that he wasn't going to go to the Davos Economic Summit. That's where he was supposed to meet the Chinese premier. He might change his mind. He might get a deal. And this is the 15-minute chart, so it's more of a fast-moving chart. It is getting reset right now to oversold conditions, live, by the way. This was the big little sell-off. We bought a little bit of the puts here. We came in, we saw the reversal, we went long, and this is what happened. And this is where we are right now. But the chart that I wanted to show, and this is an excellent trading chart, is this. So this is your daily chart, not necessarily an intraday trading chart. All my intraday trading charts are displayed very clearly in very precise notations on the Twitter feed. Please take a look at it. So we have an inside candle here. This little red candle is down 550, 5.50 on the E-minis. Still looking good. You have a major resistance from the 1029 2018 lows. That was the breakdown level, and that is pretty where we want to go to, which is 2602. So even if we open down a bit, let's say 50, 60, 70 points, as long as we hold this channel, you're good to go. I still think we get to 2649, which is roughly around that 2650, 2655 level on the SPX, which means Boeing's going to be up another $6, $7, $8, $9. Stocks are going to be higher, the ones that we trade. And so far, it's looking fine. As long as we don't breach the 2550 level on the E-minis, then the pattern doesn't change. And you guys can clearly see that. There's really nothing to report here. The VIX. I'm pulling it up from my Twitter feed on my other screen, and let's see here. This is the last chart that I'm going to show tonight, because this is the one we have to watch like a hawk. I consistently kept on saying through every single intraday volatility, 50, 60 points down, we're going to be okay. The uptrend's going to be intact. Not because I am Oprah Winfrey, not because I am Dr. Phil or Tony Robbins telling you everything's just going to be fine. No, everything's not always fine. But I kept on focusing on this. This is what I need all of you to focus on. This single chart will tell you whether you want to bail or whether you want to continue holding your positions and adding to lower your cost basis. The VIX is very clear. Quad, QUODD, any of you would like to use it, I'll send you the email, call them up, they give you a free trial. It is amazing. I use it for short-term trading purposes, long-term trading purposes, and specifically for the VIX, because this is the ultimate contrarian indicator that is telling me whether or not the markets are going to croak, completely collapse, or this is the canary in the coal mine, right? Canary in the coal mine. This is your sensor. This is your what's it called? Carbon monoxide sensor in your home. It starts to beep. There's something going on wrong, and you better go around to see where the leak is before the house blows up. Right? So at this point, we are reaching some extreme levels. One of them is exactly here, 1965. We're very close to that. The big one is down here, big arrow, which is around the 18 level, 1691, 1567. So if the market does attempt to go above 2650, we are going to, or 2650, yeah, we are going to hit this level here. This is a major support level. You all can see that. At that point, the VIX will bounce. The VIX will bounce. And the VIX bounces 3-4 points. That means the market will lose 400 to 500 points. Easy. So you want to be on the SPY puts. You want to be in the VIX calls. You want to short whatever stock you want. I generally go with the index puts on the short side. Or you can buy the UVXY calls, right? There's many instruments you can use. Again, we have a big downtrend line at around 22, 23. So once we get down to these levels, we could very well jump up from the 16 plus level to 22, 6 points on the VIX. That's a lot. That means we'll fall 6, 7, 800 points. Our charts on the other side show us that if we do have that inverse head and shoulder that I just showed you, you could drop 600, 700 points. We could have that within a day. And the reset is complete. Once it hits that, if the market truly wants to go higher, then it will be rejected from that point and the game begins. If we break the 16 level, which I highly doubt unless we really take off towards 2800, then we will hit the 12 level on the VIX. Now, shorter term, the VIX, which I kept on saying, the slow stochastics crossover, down, despite intraday movements trying to hold up, VIX moving up a point or two, still continuing down. It is almost at extreme oversold level. Just the exact same thing that we do with stocks and the SPY and charts. Once you get deep extreme oversold and you start to see the beginnings of a turn, you want to be cautious. You want to lower your long positions and you want to start nibbling at the shorts, i.e. through the different vehicles that I just mentioned. My favorite short of choice is because SPY puts or the SPX puts. So that's it. So we are not there yet. I'm squinting my eye trying to see that, but I'm starting to see that it is starting to bottom. That means VIX comes down to this uptrend line here, right there where the little arrow is, which is around that 18, 19 level. The markets will hit that 26, markets will hit that, we're almost at 2600, 2650, 2630 level. Then we better start putting in some nice little shorts. You don't have to go crazy. You can always nibble. You always nibble at the bottom. And if you start to see the VIX moving, pedal to the metal, buy more. Because everything's going to be very fast and furious. That's the nature of algorithmic high-frequency trading, black box program trading. We like to be one step ahead. Now, if somebody is really bullish and I am tactically bullish, then they're going to say that this is going to happen. Well, I think this is going to happen, that we are going to basically complete this pattern here, because this is a major support level, because that's a massive head and shoulder. Head, left shoulder, right shoulder. You don't have to be a technical genius to figure it out. I'm doing all the hard work with constructing the charts. You just have to read them right. So somewhere in here, we are going to get a bounce on the VIX. That might come, in my opinion, in the middle of the month. Remember, the middle of the month, give or take a couple of days. So let's look at a calendar print here. This is how great Clueless A trading works with timing. We have been right within days of things happening, if not the same day. The 15th of the month is Tuesday. Give or take plus minus 1 or 2 days over the 15th, we are going to see massive volatility. So sometime by tomorrow, if not by Monday, it all depends, we need to lower your positions. Now, we do have the strike for the 18th. Doesn't matter. You can always move if we start to see a deterioration on the E-minis. The 18th is also happens to be the monthly options expiration. I can do it here. The monthly options expiration right there. Can you guys all see that on the screen? Yes? Can you guys see the calendar on the screen?
Yes.
Okay, great. So basically, this is the 15th. So 15th, this has always been my experience. That's your sort of mid-month reset. So these 2 days could be extremely volatile. And then we have the monthly options expiration. Monthly options expiration, generally a very bullish event that I've proven, not I have proven, that I've said and has been correct. But it doesn't always have to go into the 18th. It could be the 16th or the 17th, which is a Thursday, that we could get that big spike up. So whichever the case, we have the calls for the 18th because it's a bullish event. But manage your trades depending on my charts as we move along, because we are approaching the 15th. It's just happens to be that the third week of the month, monthly options expiration, which is generally a bullish event going into it, happens to be in the same week that the middle of the month is. Sometimes the third week of the month is not the middle of the month. I hope you understand what I'm saying. I believe they're going to finish January on a good note. There's a lot of volatility factors out there that I've mentioned to you guys. And I hope that you guys all found this strategic webinar very helpful. If you have any questions, I'd like to answer that before we sign off. Jody, Mike?
I'm good, Frank.
The last thing I'm going to say is individual stocks can do their own thing. I have select choices, which even in the worst, when we were down 160 in the market this morning, I was watching it. I had an important family obligation I had to take care of. Chipotle was going nuts. Tillery was higher. Clovis was down 15 cents. Then it started going higher. All this while the market was down 100 to 150 points. By the time I arrived on the scene by 11 o'clock, the markets had already turned around. So selective stocks, sometimes which are non-correlated with the China trade issues, with government shutdowns, will do well. So as a trader, as an active trader, or a non-active trader, it's not always about all the big market picture that I painted. It's about the selective stocks. I try to do my best to pinpoint those during the week, and some of them you just have to keep on rolling the calls. I said that with Juno Therapeutics, they got bought out for a huge premium. The calls were up God knows how much that day, from $1 to almost $40. That was what? Last year before. Loxo, which we traded here and there, I just had a very little few shares on the biotech basket, was up $92. They got taken out by Celgene. So individual situations will work differently. Market moving stocks like Boeing and sub will follow the market. But even Boeing today, because of the upgrade to $450, I don't really care about upgrades, but it's nice. Technical charts are showing the stock does want to go to 400. Boeing, despite all the China issues, beat out Airbus and all the other competitors. That's what makes America great. An American company beating out all their foreign competitors just on their quality of their work and other countries buying them right, left, and center. So that's it. So focus on individual stocks, keep it on the bigger picture, and that's all I got to say. So thank you for attending. See you guys all tomorrow. We are entering a turbulent part right now for a couple of days, going into the middle of the month. So let's keep position sizes, whatever you want to put. Don't go hog wild. Small gets big. But purely from a technical standpoint, pattern completion number one. You can see that. This is Lego stuff. 2650. The 1, 2, 2700, 2800, which I think the most the market can get to. Will that happen in a straight line? Nope. This is looking like it happening in a straight line, not when you're dealing with intraday trading, not when you guys are flipping out every time 15 minutes the market's pulling back a little bit, but this is the first. I mean, this is the first. Actually, this is one. This is, I'll call it half. This is half pattern completion right here, 2602. So a little bit more to go, and then we probably get a pullback. As long as the uptrend channel goes, we're good to go. So get ready for some volatility. Great returns have been delivered. Please take advantage of it. Talked about the emotional stuff. Try to control it. Only way you can dampen your emotion things, and not by sitting and chanting. Okay, it's by getting immersed in these tactical charts, listening to my webinars, signing up for the advanced coaching sessions, and just staying focused. That's all. Have a great evening. God bless you all. See you guys tomorrow. Thank you, guys.